Welcome back. You're watching the India market close, and markets have recovered from their day's low. It's looking like a pretty decent close compared to the pressure that we faced through the day. The question is, what next? We're on the eve of a big news piece, which will come in overnight. How do you strategize in a market like this? We have two very special guests joining us in our studios here at NDTV Profit. I'd like to welcome Nirav Sheth and Manish Sonthalia, who are with us today. Welcome. Thank you so much, gentlemen. Great to have you here. Manish, let me begin with your take on directionally where we're at. We've hit the 21,000. We've receded a bit from there. Are we going to have to wait for a bit of a correction? Is a correction / pause around the corner?
I mean, a 5 to 7% correction can happen in any markets without any reason. So, first of all, in India, we don't have a reason for a correction, but it can happen. Just because things have got a little overbought, non-stop rally from 18,500 to maybe a 21,000. All those factors could be reasons. But fundamentally speaking, I think, it's a buy on dips market. It's a buy because you'll be stepping into January, you'll be having the earnings season. By and large, earnings season should hold out as per expectations. And Nirav can throw more light on this. It should not disappoint anything majorly. And as we step into projecting FY26 numbers, because FY24 is coming to a close and you always project next 2 years of numbers,
Oh, you reached FY26 now?
Yeah, absolutely. FY26, I mean, Nirav, FY26 numbers are getting projected for all companies. So, firstly, we were not expensive even on FY24 numbers. Now, if you're looking out at FY26 numbers, it's just a matter of time that we'll, crawl higher.
Yeah, we had a vision document of 28 just yesterday. So, yes, in that sense, projections are there. The question is, how believable or credible are those projections? Do we know enough that uncertainty is behind us? Buzzword for the last 2 to 3 years was uncertainty. Is that no longer the buzzword?
No, if you see the high frequency indicators, we really don't see too much of a negative surprise. I mean, oil is below where our comfort level is. Inflation slightly on the higher side, but still within control. If you talk about corporate earnings, it's jolly well fine at 15 to 20%. Few sectors could be here and there for, let's say, a quarter or two. Q3 could be furlough season for the IT, or consumption may be slightly weak after Diwali. All of that get reflected. But on a longer term trajectory, the broad, all well-known story about India, demographics and BFSI, the savings and all of that, I mean, I don't see a problem of a 15 to 20% growth, and it's just that as we progress into time, many more new highs would be seen in the market. I mean, that is how broadly I would look at it. But you may call me a eternal optimist, but I would feel it that way.
That works. Optimistic.
$4 trillion economy, right? So we just joked about 28. Incidentally, I think the PM office will release a 2047 document, right? We are expecting we want to be a developed economy status. So something is going right. And now in hindsight, we know that we have run a very, so we are very conservative in terms of our fiscal position. We are very conservative in terms of monetary policy, and we are very conservative in terms of our banking, the way we are running our banking system, right? And then we talk about the digital infra and the physical infra and stuff like that. So it has taken 6, 8, 9 years to set up the building blocks. The reason you want to look forward is because you can look forward. And that gives you the longevity of the P, right? For the first time. What does an election do to you? It gives you longevity. I expect this continuity over a slightly longer period of time, which means that I can look at slightly long-dated earnings. That gives you P. You've got 3 or 4 countries which are ahead of you, right? So he's completely right that, you'll have some corrections along the way. You will never have uncertainty out of the way. You'll start worrying about something else. That is the nature of the beast. But the fact of the matter is that, and this is what my father taught me, that you had emergency in 1976, you had nationalization, you had scams, and all this while, even before the FIs came in 1992, markets had done well. BSE was 100, right? And then you had 2000, 1978, it was 100, right? And because the fact of the matter is that your GDP grows every year, every day your profits grow, and therefore markets will eventually move up. So, but I believe that we are very, very well set. Only we can kill our own dreams now.
Okay. Now, I want to take one quick question, and we'll have to slip into a break as well, but one quick question. I remember a conference that Emkay had wherein you were extremely confident about the commentary that came in post the conference from a large degree of SMID companies.
Absolutely.
Right?
Absolutely.
Yet SMIDs are the one which have done well, large caps haven't. A lot of people are saying 2024 will be a year of the large caps. But the more promising names are happening beyond the Nifty, right? Power financing, massive bull, power ancillaries, superb run, defense, etc. So are you as a house and both of you individually, are you constructive on the broader end of the spectrum still, or are you tilting towards large caps?
I think, again, the story of India over the next several years will be the broader participation of the economy, and that is actually what you are saying. I call it democratization of the earnings. Right, I'll just give you some data. So if you look at the last 4 or 5 years, you would have roughly about 800 odd companies going to about 1,000 companies in BSE small cap index. Their profits have almost more than doubled in the last 4 years. Today you got about 1/3 of the small cap companies earning more than 200 crores. This figure was about 15% 4 years back. Right? So whatever upgrades you are seeing in corporate taxes, the upgrade that you are seeing in the earnings is being led by the fact that you got plethora of companies, right, which are doing very well. And please appreciate the fact that all of us have a feedback mechanism, right? Because you had a situation where a lot of the companies like Bajaj Finance and Kotak and SDFC got re-rated. You are sending positive signals in terms of how banks have to be run. And therefore, a lot of the banks understood that the way to grow market value far ahead of the book value is by adopting less, better underwriting standards for loans and stuff like that.
Yeah.
So now, there is not a single small or mid-cap company I would have met which doesn't talk about ROC and ROE. Right? So it's getting very competitive. Right, so Manish can add, but I think that opportunities are endless.
Niraj, when we are investing in the alternate space, let's say PMS or AIF, I would believe it is all about stock picking, right? If there was to be an allocation, agenda in front of investors, if it was large caps, people would go to ETFs, people would go to large cap mutual funds. Plus, I think what Niraj is saying is absolutely correct. A lot of wealth is going to get created in the next 10 years in many young companies today, which will become large companies. And if you're early in realizing those things, you'll ride the growth story. Now, when you talked about, let's say, energy, this is one of the themes in the product that we launched, right? And mind you, and in spite of so much of communication in the media and so on, COP28, let's say 2017, net zero and all of that, and we know that it's a transition that is happening from, let's say, fossil to renewables. Entire gamut is going to be very large between now and 2030. The sooner you realize it, the better for us.
You're the second person to say this only today. And the conversation about renewables...
Green energy is not a 1 year, 2 year theme. Or energy is not a 1 year, 2 year theme. Mind you, if India has to achieve 6 to 7% real GDP growth, we are under-invested on energy. And unless we up the ante on energy, we are not going to realize that 6 to 7% growth.
Okay. So hold that thought. We'll slip into a quick commercial break, but when we come back, let's explore this further and try and probe the 2 or 3 things that you guys believe are the key mainstays, right? Slip into a quick break, be back in conversation with Nirav as CEO of Institutional Equities at Emkay Global Financial Services and Manish Sonthalia.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're watching India Market Close. Time for a quick F&O check. Nifty expiry, Bank Nifty expiry day. Agam Vakil joining us with more on that. Where do you think it's going to end?
Right. Well, Tamanna, we are keeping an eye on 47,000 as far as the Bank Nifty is concerned, but I'm going to quickly talk about the Nifty. Unwinding in open interest as far as those positions go, flattish movements coming in as far as the benchmark is concerned. For the Bank Nifty specifically, as I was mentioning, it does seem like there's been a lot of accumulation, a lot of consolidation around 47,000, and that's exactly where we're expecting today's weekly options expiry to end. We have seen 7% increase in open interest. Coming down to the Nifty, we continue to see maximum open interest around the 21,000 call, and perhaps a little bit of support provided by accumulation in open interest around 20,800 and 20,900 puts. In terms of changes in open interest, let's take a look at that one as well. And as one might expect, it is essentially 21,000 where we have seen the most amount of addition in open interest towards calls. Finally, coming down to stocks which have seen the most amount of increase in OI, we do have shorts building up in PI Industries, Apollo Tyres and Ultratech Cement, and longs in Pidilite and Metropolis. On the other hand, when it comes to stocks which have seen an unwinding in open interest, about a short covering coming for Alchem Laboratories and Birlasoft along with Bosch and BPCL, and Granules looking at unwinding. But again, to answer your question, we are keeping an eye on 47,000 on the Bank Nifty, and it does seem like the way things are panning out, we're likely to see expiry coming through around that mark as well.
All right, thank you for that, Agam. Well, markets back in positive territory after a fairly tumultuous day. We're completely flat, but yes, good levels of recovery. As we are winding too close. IT is still not finding too much support or relief over there. The entire pack is down in the red. REC, PFC continue to be, stellar performers on a day like today. And I just want to quickly pull up Ultratech, because Ultratech is our stock of the day. They've crossed a milestone as well. We talked about TVS a short while ago, but Ultratech also crossed 10,000. They've receded from there at, 9740, down about 1.5%. But yeah, nevertheless, a big day for them. Let's go back to our conversation here in the studio. And before we went into that break, we were talking about the renewable energy push and how that's the big story. Just in the context of Ultratech, they've said 80% of the energy they'll use will be green energy by 2030. In the last few days, a slew of companies have set such targets. I just want to ask you that when you hear such targets, how do you sift on how much of this is greenwashing, how much is real, and how much is really going to turn into something? Let me start with Manish first on that.
I don't think we have a choice. What we have articulated as a country in G20, in COP28, we have gone inside 2070 net zero. We have set ourselves targets at 2030, 500 gigawatts or 450 gigawatts renewable. Within that, let's say, solar is going to be around 300 gigawatts. So we have given all the details as to how we are going to do it. Now, the whole thing is that everything has to get boiled down into action at individual companies levels, etc., which the companies now today are articulating. That as opposed to fossil fuels, we are going to move to green energy. So I think it's a very positive step, and for the simple reason that, as opposed to fossil, green is more cost effective. It's more local than geopolitical. You don't have to rely on Saudi Arabia and Iran and Iraq. I think, you have an advantage in terms of, regulations in your favor. Government is giving so much of incentives in terms of PLI to set up renewable capacity and so on and so forth. So I think all of this is a reality. It's not a fiction. Adaptation of this may take some time, but it's surely around the corner. I mean, we are talking about some 175, 180 gigawatts renewable. When we talk about, let's say, 450, it's more than double, right? Even if we assume, let's say, 50, 60, 70% of this, it's going to mean a lot. And, you have these same companies which today are small, which are going to become very big. The guys who are financing them are going to become much bigger. And look at the valuations of some of these companies. It's very mouth-watering, I would believe, in terms of dividend yield. You may say that these are PSUs. I don't think market has an apathy towards PSUs any longer, because you search for profitable ideas. We have seen the defense companies get created. One of the biggest wealth creators. There's no problem with the defense company. I think it's a different way to look at India now, in terms of the construct of enterprises which are making profits, where the outlook of profit is good and the valuations are very palatable. You'll have tons of money coming into them.
Just a word there on IREDA. In this whole green energy kind of scope, any view over there on stocks like IREDA? And when you're saying, you're looking at companies which are willing to go green, to spend on going green, in terms of profitability, in terms of how attractive they are, what are the parameters you're looking at? Intent, money they're spending, or efficiency and ability to achieve those targets?
So I agree. So one thing I'll just agree to what he's saying is that this green energy and stuff like that, climate change is no longer a narrative. So it's an existential crisis. First you have to accept that. That's very clear. What it does is two things. You have to delink your capital expenditure from profitability. It's exactly like that electric vehicles is the future. There is no doubt about it. You don't know the pace of adoption. Yeah. Now, whether Maruti makes money or not, whether Tata Motor makes money or not, whether TVS makes money or not, you have to invest in electric vehicles because that is the future. So a lot of the things are coming together. One thing is this entire shift towards renewable and the green energy, right? It is forced onto you, and that will have its own level of capital investment and stuff like that. We've done a lot of work on green hydrogen, right? And the targets of $2 and less than $2 and all. Let me tell you that we don't have a great path to profitability.
Yeah, I'm
right?
just going to ask
Absolutely. So we don't know clearly how this is going to happen. We don't even know exactly how the electric vehicles are going to play out. I suspect that Tesla now is very likely to come to India, and at $24,000, if you read the book, it was a vision statement 15 years back that I'll keep on reducing the prices no matter what. That is his business model, right? So it's a question of time. And there will be implications in terms of what that happens. So it is less about the sectors, it's about the fact that it is more investments in the country. There'll be winners, there'll be losers. It is nothing. It is like you would have argued that, airplanes have come and therefore what's going to happen to trains. I don't care, because at the end of the day, the productivity increases is dramatic, right? So you're going to see something on those likes. To me, you are entering. So you've not even seen, for example, the corporate capex, right? We're just talking about it. But I'm almost willing to underwrite that as we move 6 months, 9 months out, you're going to see a surge in corporate capex. And I think my sense is that when you're talking about PSU banks, they are the ones who are going to write a 10,000 crore check.
Wow.
A lot of the private banks, they've been too obsessed with granularity of retail lending because that is what the markets have rewarded, right? And suddenly when it comes to writing project lending and stuff like that, I won't be surprised if PSUs actually grow faster than the private banks. And I think somewhere the market is telling you that, including REC PFC, right? Because who is going to finance these green projects? There's an element of risk.
Exactly. So, if an assumption that, with not an assumption really, the outcome seems to be at both of your end that PSUs are doing well. A lot of these businesses have gotten a tailwind of strong government push in policy, which is aiding visibility there. So, within this bucket, there is defense, there is PSU financiers, bank, power financiers, so on and so forth, and there are a clutch of other names as well. Where is it that you would probably be comfortable laying your biggest bet at the PSU end? Nirav, I'll start with you.
So my sense is that I am looking at corporate lending, right? And people will assume that it is not very profitable because today 90% of my lending is BBB and above, right? I think that is going to change over the next several years. You just don't have a very viable bond market in India, right? So I'm looking at growth and I'm looking at profitable growth. That is one thing that I see a great scope for that happening. I think we are also underestimating the power of what you would now call the account aggregators and stuff like that, right? So that is an equivalent of the standard FICO scores or CIBIL that came about, right? So we fret quite a bit about the risk in the system. I don't see anything, right? So we are talking about less than 50,000 rupees loans, which seems to be facing some problem. That is 0.3% of personal loans, right? So it doesn't figure anywhere on the charts. But I think across you talked about the PLI manufacturing, the EMS companies, a lot of these companies are there, a lot of opportunities are there. Now, I think, please don't get us wrong, it's not that we are asking you to go and buy something tomorrow. I'm just saying in some of the cases, the valuations are ahead of the story. In some of the cases, stories ahead of the valuation, which is fine, right? So that is the second lot of detailing that you want to do. But there is no doubt that a lot of these companies have massive opportunities, and we're not even talked about China plus one and now Europe plus one and all that.
Exactly.
Right? So a lot of things are falling into place, Niraj.
No, and we will talk about some of them in later conversations, but specifically to the PSU basket, because they were so maligned. If you had to place your biggest bet, where would that be? Within
even totally PFC, REC, because there is no way for you to play the utility renewable chain in a leverage way.
Except for these.
You'll have to hunt for small companies. There'll be some transformer company over there. There'll be some capital goods company over here. But you want to take an aggregate bet, and it's a leverage bet.
Then
absolutely.
You can do this. Okay, that's a pertinent point. So that's on PSUs, and thank you for that, Nirav. Manish, to you, there is beyond PSUs, there's a wide bucket. You've told me in the past that you've got nerves of steel, so small shakedowns don't matter to you. If you had to bet on one key theme for the next 3, 5, 7 years, because I heard you say that the stories are for multiple years, what would that be?
Consumption is an evergreen theme today.
But evergreen may not necessarily give you the biggest bang for the buck, or will it?
No, that's the whole point, that as the earnings keep on going higher, you want to push the valuations even higher. That is one.
So what within consumption then?
Anything discretionary. I'm not betting on staples, but discretionary. a direct play on the demographic per capita income. And for the last 2 quarters, this sector is down, right? Similar is the story with IT. If artificial intelligence is going to push up enterprise spending in technology, India will gain out of it through the making of applications. We may not be the inventors of the technology of OpenAI, right, or ChatGPT, etc., but we'll make applications like we did when Y2K disruption happened, when the social media smack happened, when the cloud computing happened. We were all participant to that. And currently this thing is again in a very nascent stage, where there will be small companies, there will be mainstream IT companies which will all benefit out of it through business coming from the technology innovators. I think these 2 themes is good enough for creation of a whole lot of wealth for individuals. But you got to keep that faith that, this thing is not going to die out. Any consumer company which makes gross margins in excess of 50-55%, they do have a moat. So you may say that the valuations are very expensive, but having a 50+ gross margin is very difficult. And if these are sustainable, and these companies even have a 20% sort of a growth, then valuations will only expand. You have known all the retailing names. I don't want to take names, but look at Trent, etc.
Anything in
there's
IT?
A total
Anything in IT you like in terms
engineering
of the AI
R&D
play?
companies is going to be the next flavor of many years to come. India is going to become a hub. We saw recent listings, etc., right? And the earnings is very fine, I would believe.
Just one question if I can ask, and of course there's so much enthusiasm, optimism in this newsroom, in the markets as well. But as a cautionary note, when you have such a huge tide, everything lifts.
Goes, yeah.
All of it may not be worth it.
100%.
There is a concern of stepping onto landmines, also for a lot of investors who may not have the wherewithal, because everything is buzzing. What would be the filter you would apply? If, for any of our viewers who are watching, and I'll ask this to both of you, the top 3 things you would look at where that red flag should go off.
Some track record of profitability, right? Typically in and around the cost of capital, literally at around 15%. I would believe the management integrity check needs to be very thorough, and particularly when you're dealing with small and mid caps, you are bound to step in a field of landmines where you have to be very careful. Structural businesses, don't buy too much of cyclicals because that can give you jagged curves on the ups and downs. Palatable valuations, because everything at the end of the day is, your profits into your multiples. That will determine how much returns you are going to make from that company. And business should not get disrupted, because today we are living in an era of disruption where everything tends to get disrupted. And a lot of terminal value as opposed to what is being seen as the explicit value. I think if you have these 5 checks, irrespective of whether large caps, multi-cap, mid-cap, small cap, we are fine. Growth will take care of valuations. And I think India is a growth market. Growth strategy should work well.
Nirav, you want to add that? Manish put in 5.
Yes, he's an expert, so his job is to manage money, and therefore he filters this very well. But for investors, I have a very strong view that you are better off getting into a mutual fund or an ETF. It is not easy. It is not easy to consistently generate alpha. People don't do it over a long period of time. It's very difficult. You've got technology that has evolved significantly now, right? Which means that you can actually have a Nifty link ETF. I keep on telling my children that I believe that I can invest very well, but if I have to bequeath my wealth, I'll give a Nifty ETF. I think about this a lot. What is that you want to give that can last for the next 50 years? I cannot think of anything other than Nifty. So to say that his job and therefore he'll have a lot of checklists. For a common investor who is using a lot of other things to try and assume and simplify, it is not an easy job.
Yeah.
It's not an easy job.
That's more of a penetration story. I would believe that equities as a percentage of a guy's savings pool is just about 5-6%.
Nothing.
So that has a propensity to go up. So how do you start? But there will always be a scope for active investing. There will always be a scope for passive investing.
So, so I'm saying they should come either to active investing or to... that is what I'm saying.
No,
but I'm saying
Manish ko paisa do, ya to ETF mein paisa do.
I'm not trying to hit your business.
What I'm saying, you do your own introspection, understand your own temperament, and palatability of your risk appetite, I mean, then decide, I would believe.
Gentlemen, such a pleasure. Thank you so much for taking the time out and being with us today.
Thank you so much. Pleasure being here.
And the pleasure was ours.